How can current events affect stock prices? By www.options-trading-education.com. Sometimes the best investing and trading plans can go astray when current events change the fundamentals or simply public perception. How can current events affect stock prices? An example from the news is the potential for Brexit, exit of the British from the European Union. The Wall Street Journal reports that the Brexit outlook steers markets. U.S. stocks notched their second straight day of gains as investors kept their focus on whether the UK will vote to leave the European Union later this week. Markets have moved in tandem with polls around Britain's referendum, which have triggered steep movements in equities, bonds, and currencies around the world. In the past week, stock markets have fallen sharply when polls tilted toward an exit vote and rebounded just as quickly when they veered toward remain. This is an ideal situation for options trading, as traders can hedge their bets against either a Brexit or a decision to remain in the European Union. The economic risks of Britain leaving the European Union could be huge and even global, but all of that could disappear with a vote against leaving. But what other current events are out there that could affect stock prices? U.S. interest rates. Although Brexit or no is the news of the day, it has been potential for much higher U.S. interest rates that has had the attention of markets for the last year or more. How can current events affect stock prices in this case? ABC News reports that U.S. stocks rise as Fed Chairwoman Yellen testifies before Congress. U.S. stocks rose Tuesday as investors were relieved to hear Federal Reserve Chair Janet Yellen say the Fed will remain cautious in raising interest rates. The market seems to have responded well to Dr. Yellen's tone of caution, said Phil Orlando, Chief Equity Strategist for Federated Investors. The U.S. Federal Reserve kept interest rates near zero as part of its policy in helping the nation recover from the Great Recession. This drove the value of the dollar down and had worldwide effects on investments and investing. When the Fed announced its intent to raise rates, the dollar started to climb, and stock investors worried that excessively high rates would kill off the economic recovery. Markets of late have been reassured every time Chairwoman Yellen says that the Fed intends to proceed gradually and carefully in raising rates. War, terror, and natural disasters. This can be a direct cause and effect relationship between current events and stock prices. For example, the threat of a hurricane on the Gulf Coast of the USA can throw oil prices higher because of the threat to oil platforms and refineries. The same threat can drive down the stocks of insurance companies that will end up paying for storm-caused losses. When war threatens in the Persian Gulf, oil prices rise, and when Japan and China trade threats over islands in the Sea of Japan, trade might suffer and stocks falter. Again, options trading instead of direct stock trading helps traders limit risk and potential losses when current events affect stock prices. For more insights and useful information about options trading, visit www.options-trading-education.com.